Hi guys, good afternoon everyone. This is Abid Khan and you are watching Karachi Academy YouTube channel. So here we are doing IGCSE past papers and for the October November 2021 paper 2 variant 2. So yesterday we did with question number 1 and 2. So today we will be doing question number 3. So move on to question number 3 and see what it says and what it requires. Question number 3 on 31st of July 2021, the following information was provided by KA Limited, a manufacturer of garden tools. Is a manufacturer of garden tools. Okay. So this is 21st July and they are giving you inventory for 2020 first August. This is whole year data, right? So this is your opening. This is your opening data, right? So raw materials, progress, finished goods, right? And during the year the purchases they made were raw materials, finished goods, carriage, okay, and the carriage they paid on the purchases with raw materials, or the carry on purchases of raw materials, on purchases of finished goods. This amount is given here, and then direct labor, direct wages, direct wages, and this could be your part of your prime cost, right? Indirect factory wages 24,000. Indirect factory, this they will be your factory overhead and factory machinery at cost, and provision for the depreciation of machinery. So these two parts, two of them, we will calculate the depreciation. Okay, let's move on and see. Okay. General factory overheads 16,400. So they are your factory overhead, general factory overhead, right? Rates are 5,300. Rates are also your factory overhead, right? So inventory 31st. Now this is your closing inventory. Raw materials inventory is 6,030. Work in progress inventory 62780, and finished goods this one. And this is your total inventory, closing inventory. This is your opening inventory, and this part is during the year what purchases you made and how much you spend on during manufacturing and production of your goods, right? So this is the revenue of, this is all full year data they have given you, and additional information given to you is okay. Guys, always consider just note one important thing. When they hits you, and when they give you additional information, then you have to see if the same data is appearing in the whole year's data, then you should mark it out so that when calculating your cost of production or your P&L, you should not miss anything, right? So on 31st of July, rates 500 were created. You can see rates are here 5,300. Rates are here 5,300, right? Out of this 500 was were created. So it means you mark it here, and rates you mark it here. And when we will do calculations, so when we will consider rates, so we will consider this as well, right? And rates are to be, and whatever the rates total 5,600 minus, this is your prepaid 7 out, whatever the total rates you arrive on, 50% will be your factory and 25% will be your office. So we have to take care of this as well. So another additional point given is 31st July 2021, the factory general overheads 230 were agreed. Means these were the expenses which were not recorded, which were not paid. Means if we see the general overheads, so these are the total general overheads 16,400. It means these 230 were the expenses. These are the total paid expenses of general factory overheads 16,400. It means Here, this 230 are those expenses which have not been paid in their actual. So ultimately, your total expense will be the paid expenses plus the actual expenses. So this will be your total expenses. And what they are saying, no allocation. So this that's all. This is all what is given here. So move on. Okay. So here, and factory machinery is to be depreciated at 20%. 20% you have to do the depreciation on reducing balance. These are the important points that you have to highlight. So machinery, you will get 20% depreciation per annum, and the method is reducing balance. To prepare the manufacturing area, we are saying prepare manufacturing area. Okay, okay, and for the year ended 31st of July. Okay, for the year ended, you have to make a complete manufacturing account. So we will make the manufacturing account. He has given you the format, so you have to put all your information onto that format. So just for as I'm just solving your question here, so I will not be putting information here, but I will be using the same format. And you have when you will be appearing when you will be in your exams, you have to put all information into the format. So just see the format. Sometimes you give some information within the format. So you have to consider those information also. So here, more information is given. Also, question is there 10 marks. So we will try to finish it quickly. So this 10. Okay. The B part is prepare trading section. So first we will do the A part. So A part we will go on to and we will calculate K limited manufacturing account. So this is our K limited manufacturing account, right? So I will not be putting figure here. Instead, I will be putting all the information about where the question is given, but you have to put information here. Okay. So I am making. Okay. So K A limited. What you have to make the manufacturing account to the year ended 31st July 2020. Right? This is your account. You already have made with the manufacturing account, so you will see. So first of all, we will calculate the raw material consumed. What is your opening? We will take opening raw material, which is 5,220. Okay, and what? Okay, so what are the things we will do? We will take them so that nothing should miss here. So we have to see the purchases are here, raw materials because we are manufacturing account. So this finished goods they have also purchased this finished goods. What does this mean? It means they are manufacturer as well as trader. Means they also buy the finished goods and sell them. So this is their trading goods. For raw material, they are purchased for manufacturing purpose. So the raw material is your 34,000. Purchases are 34,000. Okay. So so we are done with the 34,200. And finished goods, nothing to do with this. Carriage. What carriage we have paid on raw materials is the cost of raw material. Because this 410 of carriage incurred we have paid um, carriage 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 how much we get 200. So this will become part of purchases because we have paid this amount of purchases. So we can do the calculation for okay 5,820 plus 34,200 plus 410. So the total will be 40,430. Okay, so this is your total purchases. Then what you have to do, you have to less closing inventory of RM. And how much is your closing inventory of RM? This is 6,000. So we are done with this. 6,000. 030. We will deduct this. So out of this, if you deduct 6030, so this is the total amount of raw material which we have used or which we have consumed, right? So this is your raw material. So we have come up with the raw material, right? On so this part we have done. So we will add the direct wages. So direct wages, when we add direct wages, direct material and direct wages, sorry, direct wages. We add these direct wages. So our direct wages are total 67,200. 67,000. So material plus labor plus direct expenses, but we do not have direct expenses here, right? So this is called the prime cost, right? So our prime cost, this is our prime cost. The total prime cost is just 34, and then add 67,200. So direct material, direct labor, and direct expenses forms prime cost. This is your prime cost. Prime cost is 101,600. And then you have to add the factory overhead, right? Factory overheads. All your direct expenses, all your direct material, all your direct so material, direct, indirect material, indirect expenses, and indirect labor. That all is are your factory overheads. So you will see, and we already have indicated and we have picked them out. So indirect factory wages are 24,000. Is there anything on the additional information? No, nothing. These are factory general overheads. So we already have marked. Okay, also marked it because we have to take care of. We have to consider depreciation. So I'm marking it here. These points we need to. Okay, so this is done. So factory overhead, if we come down, indirect factory wages 24,000. This 24,000 are your factory overheads. This is your indirect factory wages. Indirect factory wages. So indirect factory wages are 24,000, and then the move on. So this we have done with this. We have done with this. So deposition we will see at the later stage, right? Factory general overhead. Factory general overheads are anything given about this? No, nothing. No. So 16,000 and 400 plus 230, 16,006, 16,630. These are your indirect factory wages and factory general overheads. Factory general overheads. So we have done both of these factory rates, which are also the factory overheads. So what the actually we have counted out, there is some adjustment. So what is that? This adjustments on 31st July. Rates 500 were prepaid. It is totally you have paid 5,300. So out of this 5,300, these are your total payments you made. Out of this 500 is your prepaid. So that prepaid will be deducted from this. So if you deduct 5,300 minus 500, this will be your 4,800. So 4,800. So this will be your 4,800. 4,800. And what they are saying, out of this 4,800, 75%, 75% will go to factory, that will be factory overhead, and 25% will be your office expenses, right? So if you calculate this 4,800 into 0.75, so 3,600. So 3,600 would be the factory overhead and minus 4,800, 1,200 will go to your salary. This will not be your factory part. This will be charged to your profit and loss account after the GP. Yes, as a expense. So 3,600 you have to consider. So your rates you will be taking here. So rates you will be taking here as 3,600. So we have done with this part. No, not to be done with this. It's we have done with this. This is done. This is done. Right? And up now rates inventory. And what else remains here? This is inventory and this is revenue debit. So only one thing which is here. This is unpaid. So factory depreciation is there that we need to calculate. So you can say this is in your working. You can say this is your working month or depreciation you need to calculate. So you can calculate your depreciation in the working. How much is your cost? Cost is your 47,000. You will calculate depreciation as you will calculate depreciation as 47,000 because uh, depreciation needs to be calculated on 20% reducing balance method. Reducing balance method, you know well, where we depreciate means where on WDV, on net book value, we always depreciate. Cost minus accumulated depreciation, right? So our depreciation would be factory cost is total cost, machinery cost 47,000 minus 11,000. So this will be your total, and out of this 20% you have to calculate the depreciation. If you calculate the depreciation 20%, 47 minus 11, this will be 36,000. Its 20% is depreciation. 7,200 will be your depreciation, right? So we are done with rates and then depreciation. So we have done with this as so nothing is has left here, and all the information work in process we will see at the later stage. So 7,200 if we do calculate its total, then its total would be 24,000 plus 16,630 plus 3,600 plus 7,200. So your total would be 151,430. So factory overheads are 151,430. So this will be your total raw material, material consumed, prime cost plus factory overhead. This is the manufacturing cost, right? So how much would be 151 plus 101,600, 101,600. So this will be 253, 253 and 030. Okay, just I think I have to recalculate it. 24,000 plus 16,630, which is 150 looks very high. It's 24,000 plus 16,630 plus 3,600 plus 7,000. 51,000. Sorry, this is 51,000, right? So this will be this is total is 51,430, and if you add 51,430 with 101,600, so your manufacturing cost will be 153,030, right? So this is your manufacturing cost, but not cost of this manufacturing. So you know this is the total cost that you put during the year. So you simply add WIP, which is your opening stock, and you less WIP closing. WIP opening is your is 1750. 1750. I will do here, and 1750 we done, and closing is 2780. So we will deduct. There is something, some problem to 7. Okay, there is, which is getting here now. Okay, then we will deduct this. So 1750 we will add, and 2780 will be deducted. So if we do it, so this will be your manufacturing cost. 153 we add 1750 minus 2780. So this is 153, 153,000. This is your COGM, cost of goods manufactured, transferred to trading account. So this part we have done. So okay, guys, I have to cut it short. So we have done with part A of this question. So B and C we will do in the next video. Thank you very much. Bye for now. and like it and share it and subscribe this channel. And we'll see you in the next video with remaining part of the question.